Good evening, everyone. Able to hear me?
Yes, good evening.
Sir.
Yeah. Okay. So we'll wait for 5 minutes. Bada join
Not-
ho jaye, so we can start.
Okay, sir.
Shruti, you are able to hear me? Shruti is there?
Yes, sir. Yes, sir.
Okay.
વિક્રમભાઈ વિડિયોનો અવાજ નથી આવતો.
Okay. અવાજ આવતો નથી.
તમારો અવાજ આવે છે.
Okay.
આ જે વિડિયો ચાલે છે એનો અવાજ નથી આવતો.
Okay. હું તો just try કરતો હતો. This is one of the very good videos એટલે I think right. No voice from YouTube. No problem. We will start with the meeting. Actually 29 થઈ ગયા. Shruti, can we start?
Yes, sir. I'll just
Dhananjay
see.
bhai is not there. Yeah, is he there?
He's there. He's there.
I can't hear him actually.
I'm in, sir.
Okay, so I'll stop this sharing.
Sure, sir.
We can wait
Sir.
for another 5 minutes if you want.
No. We always start on time. Absolutely on time.
Great.
Sir,
great.
just a minute. I'm just looking if Harish sir is here or not.
Yeah.
I'll just confirm with sir once.
Yeah.
Just a
Okay,
minute.
no problem.
Okay, sir, we can start, sir.
Okay, right.
Just in time. Okay. So, good evening, all. So today, in our second lecture, that is Introduction to Fundamental Analysis, we have one of our team members, Dhananjay sir. So I'll give a little brief introduction about him. He holds an MBA degree, and he has a multiple domain experience in multiple roles like IT, networking, petroleum, downstream, industrial waste treatment. So in our experience, like I've been associated with him since last 1.5 years, and whichever company it is, like since he has worked in various sectors, he's able to provide his experience on various companies as and when we discuss. And he's also SEBI certified equity research analyst and currently working with one of the best prop desk companies in Mumbai. So we have Dhananjay sir with us, and sir, over to you now.
Thank you, Shruti ma'am. Thanks for the introduction. Okay, I got to share my screen, right?
Yes, sir.
It says it's disabled. Sharing screen is disabled. Vikram sir, I think you'll have to allow me to
Yeah, it's on.
share
You
my
have to
screen.
make him host.
Yeah, done.
मतलब ये ये कब नहीं देखा तो वीडियो
शेअर करे शकतो तो स्टार्टेड स्क्रीन शेअरिंग
I request everybody
अच्छा,
to mute their
okay.
mic.
ने मारू माइक सेट करने क्या गए नहीं
832255689. Please mute your mic.
Vikram, you should be able to mute everyone.
Yeah, but I don't
Except the
know
host.
who that person is. I thought it was you.
No, it was not me.
Okay, Manish, you have not mute. Okay, I'm doing it. Right. Start. We can start now. And
Yes, sir.
સર વોઇસ નથી આવતો નો વોઇસ
Hello.
Dhananjay sir, yes, sir.
Yeah, am I audible now?
Yes,
Yeah,
yes,
yeah.
sir.
Yes, you are
Okay.
audible, sir.
So, very good evening, and I would like let you know how I started my journey. So I started my stock market journey almost 1.5 years. I mean 1.5 decades ago, and just like majority of the investors, I also invested on tips from friends, relatives, television channel recommendations, newspaper recommendations, and many websites who post their recommendation. Okay, sometimes made money and mostly lost. So some of the companies which I had invested are not even existing right now for trade today, and majority of them are on the verge of delisting or already delisted. Okay, have you heard of a company called Arcom, Reliance Communication, or
Yes, yes.
JP Associates, which was entered at 250, and today right now it is at rupees 10. Then there was a company called Cal's Refineries, which was entered at 100 rupees, and it has been delisted long back. Then there was one company called RNRL. Does anybody know? Is there anyone from that phase? More than a decade
Yeah. We have a lot
ago,
of people,
who had
very
started
senior people
the-
also.
Yes, how many? 30,
Yeah.
35 years.
Yes, yeah, perfect. Then you must be knowing RNRL, Arcom, then JP Associates, Hanung Toys. Okay, these were the companies which were highlighted with dark fonts, and these were the companies which were which were there on the first pages of Economic Times and many business magazines and all. These were the companies which were recommended by a lot of people, and based on those tips and those recommendations, we had invested. But unfortunately, we lost money. I mean, how many of such types are there in the group, like me?
I think
There would
majority,
be
sir.
many actually.
Yeah, so yeah, thanks for being humble. I mean, everybody has passed through that phase, right? Then one fine day we found Harish sir, and from the day one, I think I was so happy to join, because he's the person who has I've attended so many technical analysis or market programs where they teach you to make money and all, but they were all bogus. They charged a very hefty amount, but those theories or those systems never worked. Okay, so I think you should consider yourself lucky being in this batch, is what I'm trying to say, because okay. So basically, uh, I mean, there are two types of research, technical and fundamental research. I think almost everybody knows about it. So I'll just give you a small introduction or difference between both. Okay, fundamental analysis, what we are going to learn is understanding patterns in companies' financial performances. Whereas technical analysis, we understand the patterns in company share price. Like technical is mostly, buying and selling happens in the exchange. Okay, like somebody is ready to buy at 101, somebody is ready to sell at 100. So if there's a buying, I mean, buyers are more, the price goes up. If the sellers are more, the price comes down. That's how the market functions. Aware of something called candles. So because of this price movement, candles are formed, and there are lot many theories on technical analysis. Okay. Now, fundamental analysis, we try to predict the future performance based on the financial statements. Okay, like say if a company has made 1000 CR as profit for a certain A year, so we try to assume that it will keep increasing. I mean, the profit will keep increasing by 1000. Whatever changes are there in the company are reflected through price in technical analysis. Okay. Now, the fundamental analysis is mostly used for a long-term investment, whereas in technical analysis, it's for a short-term trading, basically. So there are many kinds of trading. Like you, there are systems which trade for 5 minutes. Okay, algorithm systems, those are flash trades. So that comes under technical analysis. There, fundamental analysis does not come in picture. Since we being investors, we use fundamental analysis. Then okay, what do you understand by fundamental analysis? Can anyone please? Hello.
Yeah, we can hear you.
Yeah. What do you think fundamental analysis is? Anybody answer?
Yes, fundamental analysis, we think that what is the share market overall, what is the industry's outlook, and what this particular company is going to do, anything about this, how much will be the growth, and existing, what are the parameters, financial parameters, we can assess the company's right now, what it is doing, and how much is the profit. So, and we find out the intrinsic value of that thing, and whether the price is justified or not. And upon that, we take the decision.
Perfect, sir. That's a very good answer. So actually, in research and analysis, there's a part called market analysis and technical analysis along with fundamental analysis. But since we are here for the fundamental analysis class, so we'll only study about the fundamentals. These three: economy, industry, and company. These are the factors that we'll be understanding much deeply. So it's the definition is fundamental analysis is a method applied to determining the value of a stock or security. It involves an analysis of a company's management, business model, financial ratios, financial statements, and other metrics. Very well explained, sir. Okay, so this is what fundamentals. Now, how I mean, what are the approaches? So we have two major approaches here, which is called top-down and bottoms-up analysis. So in a top-down analysis, we study the overall economy of the market. As in, just when the COVID came, I mean, COVID was, the lockdown had happened. The overall global economy was down. Okay, everybody was in a selling spree. So we could say that it was a temporary bear phase of the market, which we experienced. Okay. Then first we see in a top-down analysis, we see how is the overall economy performing. We understand that, okay, the economy is doing good. So then we select a sector which we think will perform better. So after the lockdown was, open, lockdown was cancelled and the economy bounced back. So which were the sectors which you think did well? I think it was the pharma sector.
Yeah, pharma sector and
Yeah.
IT sector, no? The apps, Facebook.
Yeah, IT pharma did very well, yeah, in that phase. So like there are many sectors out of which we selected the pharma sector. Now we'll select an industry basically. So in that also there is a bifurcation in the pharma sector. There are specialty chemicals. There are companies which make APIs. There are companies which are involved in making wheels, vaccines, and all.
Yeah.
And after the industry, we select specific stocks, specific companies. Okay, like Moderna was in good demand that time when Johnson and Johnson was in good demand. So Then Borosil, 3M. These were the companies. 3M because a lot of masks and all were required. PP kits were required. Okay, so then we come down to a specific company and we select the company. And in the bottoms up approach, we select a specific company and then we select industry sectors and we see if the overall economy is favorable for the buying or not. Okay, these are the two approaches, top down and bottoms up. So in the economy analysis includes macroeconomic factors and it influences the company's performance. Okay, so what do you think? What are the macroeconomic factors that would influence a company's performance? Can you say any?
Yeah, crude oil, dollar rates. So,
Perfect, sir.
yeah.
Like crude
Political
oil,
turmoil.
the price fluctuation in the crude oil directly affects the uh, oil marketing companies like ONGC, Indian Oil, then Bharat Petroleum, HPCL. Whereas we have seen the fluctuation in gold. Okay, this is one macroeconomic factor which has affected companies like Titan, most of the jewelry companies. So these are the economic factors. Then we come down to industry analysis. So during the COVID phase, there was a very acute demand for medical equipments. So this was the phase when all the medical equipment manufacturers, the oxygen tank manufacturers, these companies were in demand. Okay. Then the companies which produce sodium hypochlorite, all of a sudden the demand shot up. A gallon which was sold for 500 rupees earlier was in so much demand that people started charging 6,000 rupees. So this was a time when they really took advantage of the demand and supply. And then we come down to company analysis. In company, we consider quantitative and qualitative performance of the company. Okay, so there are two different, two types of analysis which are done to a company. One is quantitative and qualitative. We'll take that in the next slide. So basically, these are the two approaches. In one, we start with the economy and we end up with specific company. Filtering a specific company. And the other approach is we select companies, good performing companies, and then we analyze if that company is going to give earn us some money for us based on which sector, which industry, and is the economy favorable to the company. So these are the two approaches which are used. So as I said in the last slide, there are two types of fundamental analysis. One is quantitative and qualitative. So quantitative analysis deals mostly with the numbers. Okay, top line, bottom line, the revenues, PAT, cost of goods sold, its asset quality, its liabilities, cash flow statement, like how much, what investments the company has made towards its growth, and how much money is coming down from the subsidies to the parent company. So all these number game, all these number game. Excuse me.
Yeah, we can hear you.
How can I erase this annotation? Okay. Yeah. So in the quantitative analysis, it's all number game. Company का PAT कितना है, company का revenue कितना है, what is the operating margin, what is the gross profit, then how much are the assets, what are the liabilities of the company, how much loan burden is there, how much debt is there, what is the equity, and those all factors come into the quantitative analysis. Okay, and the qualitative analysis mostly deals with the goodwill and brand recognition, competitive advantage over. I mean, like if you have two companies like Reliance Communication and Tata Communication, which would you select and why? Hello.
Yes, sir, we can hear you.
So if you have two companies, Tata Communication and Reliance Communication, which company would you select and why?
Well, it depends. You have to look at various factors, right? Which company is in debt and other things. And of course, Tata Group is more reliable, and Tata Sons has a great name, of course. Whereas Reliance
Exactly.
also is a good name.
That's what
But
goodwill and brand recognition. We know
absolutely.
that Tatas are good. Tatas are always ahead in giving value to the shareholders.
And also
And
world's biggest, no, I think so. Tata Communication is world's biggest. They have the cable network.
yeah, but if I'm saying goodwill and brand recognition. So we know the promoters, the owners of the company, on one hand Tata and the other hand it's Mr. Anil Ambani. So goodwill and brand recognition is something which affects a lot on the shareholders selection criteria. Then there's competitive advantage. Like if you have a stock called Pidilite, or maybe if you have a stock called Astral and some Jai Bhavani pipes, which one would you prefer? You obviously will prefer Astral. Okay, because it has a competitive advantage. It competes. There's a cutthroat competition even in the pipes market, and Astral is a company which puts a lot of money in advertising and quality and research and development, and it has a competitive advantage over the others. So you'll always try to select Astral. Then you will see the business model and management. Like I know one company called DMart, Avenue Supermart. I think everybody must have made some purchases from DMart, and everybody has experience. So the business model of DMart is very fantastic. Okay, they own their own stores. I mean, some very highlighted points which I'll discuss with you. They own all their own stores. Their locations are very much accessible. Then their pricing is very, very competitive. I mean, nowadays I see even the local kirana walas are finding it difficult to compete with them, because they buy in bulk and they pay their they pay their suppliers within 1 or 2 days. and that's the reason they get it at a very dirt cheap price. And the model is designed, the business model designed so nicely, so flawlessly it operates. Okay, the attendants that you see in the DMart store they work at a very low salary. So that again helps the company to reduce their operating costs. So, I mean, what I'm trying to say is the business model should be very good. Whenever you analyze a company, one should be able to understand the business model first. Like how Mr. Warren Buffett says that area of competence. So this is, I mean, in the qualitative analysis, the business model and management plays a very vital role. Then the corporate governance, which is also an important point. So basically, this is the qualitative analysis is mostly non-number kind of aspect of the analysis that is done to a company. Okay. Now, there are, like how we saw in the top, bottom, and bottoms up approach. These are the factors which are, I mean, which will discuss in detail. In the economic analysis, GDP of the country comes into picture, level of savings and investments, inflation rate, interest rate, growth in primary, secondary, and tertiary sectors, the overall tax structure, economic forecast, infrastructural facilities, then demographic factors, climatic conditions, state of economy, balance of payment, government budget. So these are the macro, I mean, the macroeconomic factors which could affect the company are called as economic analytic points. Then we come to industrial analysis. Here, the growth of the industry, like how we said, since COVID came in, and there was a temporary growth in the pharma and specialty chemicals industry and medical equipments industry. Then type of industry growth, cyclical, defensive or cyclical growth. So this is again another concept. There are stocks which are cyclical in nature, as in, like if there's a company which is involved in manufacturing sugar. Okay, so since this industry is dependent on the growth of sugarcane, I mean agriculture, it will always be cyclical. The sugarcane is harvested, then it is brought to the sugar industry, then the further process takes place. So when the harvesting happens, these companies are at peak, and when the total raw material is consumed, sugar canes are consumed, again the company goes back to low performance mode. So these are cyclic stocks. Then defensive stocks are the stocks which hello.
Yes, sir, we can hear you.
Yeah, we can hear
Yeah,
you.
I
Please
think
go on.
I got disconnected. Then defensive stocks are the stocks which, I mean, stocks like Bata or ITC, consumer goods. Okay, these stocks, anything happens, but their sale will be there. Like ITC, is भी हो जाएगा, but people wear footwear. Unless it's a war or very big, pandemic or something. Till that, it is not affected. Okay. Then the nature of product, competition, subsidies, incentive. These are the factors which affect the industrial growth. Tax framework. Suddenly, if the tax is raised on a particular industry, so the whole industry is affected, and that will directly, affect their downline. I mean, their profit after tax. Then import and export policies, they also play a vital role. Financing norms, state of technology, industrial policies, socio-demographic trends, then supply sector, industrial life cycle. These are the factors which affect the industrial growth of the company. And then we come down to a granular form of company analysis, where we see competitive advantage. So here we would want to select a stock which has a competitive advantage over the others. So I think Pidilite is a company which has a competitive advantage. I mean, for an example, there are many companies like Euro 2000 and many adhesive companies which have come, but still this company called Pidilite has overcome its competition and is the industry leader. So the company that we select should have a competitive advantage over the others. It should be a moat. Basically, it's called a moat, which does not let any competitors to grow. Then financial stability and performance of the company should be good. Growth rate should be good. Like the company that we select, its profit after tax, its revenue should always be growing. Its operating margin should always be growing. Okay. And it should have a higher share in the market. Then financial leverage and borrowing capacity. Then it should have a very good previous track record. A company which has a very bad track record is, people keep those things in mind. Like track record of companies owned by Mr. Anil Ambani, they don't have a good track record. So now, even if he comes down with a very good company and very good proposal, he comes out with a very good IPO, but people will, restrain themselves from getting into such companies or investing in such companies. So the previous track record has to be good. The profits of the company should be good. It should not be a loss-making company. Its corporate image should be good. Then there's a concept called SWOT analysis. We analyze the strengths, weaknesses, and based on that, we find what are the opportunities that are in front of us and what are the immediate threats that could affect the performance of the company. A company, while analyzing company, we should also see if it has a good operating efficiency, as in there are many companies which we analyzed, the revenues are growing, but it is not coming down to the bottom line. I mean, the PAT was not growing. The reason behind it is maybe they were paying a more salary than the market, actual market salary, or their expenses were high, their purchases were high, they were, their cost of capital was very high. I mean, cost of equity was very high. So these were the problems which we identified. So that's where the operating efficiency comes into place. And future estimates of sales. So for future estimates of sales, we normally read the annual reports, quarterly reports, and the commentary, management commentary. Just after the quarterly reports, the management comes out with a management commentary where they give us their future steps or future milestones that they want to achieve in terms of sales and growth. Okay. Now this is the pyramid where I mean, while selecting a stock, these are the major factors which we need to see. Now, starting from below, the company history and its line of business. This is a very important factor. We need to see the company's history, like how I said, if you have two companies, Tata Communication and Reliance Communication, you see the history of Reliance is not good, Reliance Communication. So you will not put in your money. Okay. So Reliance will be out at the very first instance itself. We will not be studying a company like Reliance Communication. Okay. Then we see how is the demand of the product in the market. Is the product in demand or not? If the product is not in demand, so it will, I mean, the revenue will not grow. And if the revenue will not grow, it will not make profits. And eventually the company will make losses and it will be out of the business. So for product demand, what Harish sir has always taught us, whenever you go out shopping or you go out to DMart or anywhere, so you keep seeing what products are in more demand. Okay, like he himself used to go to the hardware shop and used to check, अरे कौन सा pipe का ज़्यादा sale है, which products are in demand. So he used to get the company name, then he used to study and see if it was worthy investing or not. Okay, so it's very simple basically. We need to see wherever we go what products are in high demand and how sustainable the businesses are. Okay, so that is how one should select the product. Like we see these Domino stores everywhere. So we need to study if Domino's is making, expanding so much. What are their fundamentals? So we study the fundamentals. We see if it is worth it, we buy shares of Domino's. Okay. Then we see what is the market share of that particular company. Is it a leader? Is it a market leader in that particular sector or not? And we should always try to select the market leader, because market leader has some or the other competitive advantage which has made it a leader, and mostly it also continues leading the sector. Because if we tend to select a company which is not leading in the market, it will always face a cutthroat competition from the leader. And the leader will never let these small companies to grow. It will always keep doing some or the other things to keep those companies away from itself. I mean, in the competition. Okay, top management of the company is very important. What is the background of the top management company? Say like if a company is into construction, so is the top management qualified enough to make safe constructions? I mean, these are the questions one should ask. Then patents and trademarks of the company. Patents and trademarks are very important thing in the company. Mostly IT companies, they have a lot of patents and trademarks are basically to safeguard their technology or their research. So the more the patents and trademarks owned by a company, the more valuable the company is. Then partnership with others. What kind of partnerships are there with others? Also plays an important role. The competition, yes, is the company keeping a check with the competition or not? Like how we saw Coca-Cola and PepsiCo. Since so many years, they have not let any other company to grow. Any small company which starts making good sales will be either purchased or many lawsuits will be imposed on them. And on a later stage, either the small player which has started will sell the company to Coca-Cola or PepsiCo or will shut down the business. So that is one major factor which a moat company should follow. Then future business plans. What are the future business plans of the company? Say if DMart owner which already has say around 100 200 stores and is not having a good future plan, business plan, then it will not grow. Okay, like the management should come out saying that we are opening 50 more stores in another 6 months or 80 more stores. So that is something healthy. That is something which is good for the company. So company's revenue will grow, PAT will grow, and earnings will grow. Then market cap of the company. The higher the market cap, the better it is. Then volume of trade. What is the volume that a particular stock is in? Like we had analyzed many companies, many multi-baggers at their early stages. But when we saw when we went into detail, I mean nobody was interested to buy that stock for some reason. Maybe because their market cap was less or something was there which didn't attract the buyers. So such company should be avoided. Then earning per share, PE. These are very important factors in fundamental analysis, which will cover in coming slides. And the growth of the company. I mean, in the management commentary or annual investor presentation, are the companies are the company top management saying anything about the growth or not, which is very important. So if they are not talking about growth, then it is very dangerous to enter such a stock because the price may not grow further from there. Okay, we'll go through some terminologies. Okay, EPS, earning per share. What is earning per share? It's basically earning that a company is making divided by the outstanding shares in the market. So the definition is EPS is a company's net profit divided by the number of common shares it has outstanding. So here we get all these details directly from a website called screener.in. We don't have to calculate all this. We get all this data directly from these. So the most important thing here is the higher the EPS, the better the company is. Okay. It's basically how much earning is the company making and we should select a company which has EPS growing always. Like if the EPS is declining for a couple of quarters, then we need to exit that stock. Because there is some reason the company is not able to perform and the EPS is coming down. Because of that reason, we should be exiting a stock. The EPS should always be rising. Companies with rising EPS are always better. Then we come down to face value. Face value is the original value of the share issued mentioned in the share certificate at the beginning of the company when it gets listed. So whenever these companies they come out with an IPO, that is the time this face value is decided. Okay, some start at 10 rupees, some at 5, some at 2. It is all decided right there at the IPO stage. Okay, the face value does not change and stay constant unless the stock is split. Say if a company has, okay, the company has come out with an IPO with a face value of rupees 10. Now, if the company splits, okay, the stock splits, only then the face value changes. Okay, now we have an example of face value. During the IPO of XYZ company, the management decided the face value as per share is 10 rupees 10 to raise equity capital of 1 CR. So we divide 1 CR with 10. So 10 lakh is the number of shares which were issued. Okay, this is all decided at the IPO phase. Now we come down to book value. Book value, in short, in a nutshell, is nothing but if there's a company and say if it has to liquidate everything, Sara assets and Sara liabilities clear karke, if it has to liquidate today, what is its value? आखिर में क्या बचता है? So that is in short a book value. It's basically difference between the company's total asset and total liabilities, as mentioned here. So here we take an example how a book value is calculated. Here, are you able to see my cursor? I mean my pointer.
Yeah, we are seeing it.
So this is a textbook example to explain book value. Say the company's total asset is $2 lakh. Total liability is $50,000. And the preferred share is 25,000. Okay. So and the number of outstanding common shares is 5,000. So if we see total asset minus total liability, which is 2 lakh minus 50,000, which comes down to 1,50,000 dollars. So this is a shareholders equity. And now to calculate book value per share, we divide that by we deduct the preferred equity, which is 25,000, and then divide with the total outstanding shares. So the book value that we got is $25. Okay. All this we don't need to calculate. It is all easily available at screener.com, screener.in. But this is just to explain the example. I mean, explain the book value. I have taken this example. The assets book value is the same as its carrying value on the balance sheet. And the book value reflects the total value of a company's asset that shareholders of the company would receive if the company were to be liquidated. Matlab, if I have to liquidate the one company today, total assets or liabilities ka difference hai, that is the book value of the company. For banking and BFSI sector, this is the book value is very important in terms of banking and insurance sector. Okay. Again, the parameters that are more important are promoters and his team. Then promoters, shareholding and share pledged. This is one very important factor we need to see. Like the promoters for the growth of the company, they sometimes have to pledge their shares. Okay, मतलब वो गिरवी रखना है. So when they pledge their shares, it is not healthy for the company. It is not good for the company. So we need to see if any promoters have pledged their shares or not. Then revenue and sales are important factors. We need to select a stock of which the revenues are growing and sales are growing. Because whatever top line hai, wahi bottom line hai. If the revenue declines, mostly the profit also declines. Same with net profit, it should always be growing. Dividend and bonus record. We need to select a company which keeps on giving dividend. And it has a good bonus record. Bonus is something like, say if a company's stock has inflated a lot, it has grown a lot. मतलब 200 का stock, 200 rupees stock is now 2,500. So the company feels that people would buy it more if the stock price is adjusted to a lower price. So in that case, what they do is they give bonus shares. Okay, the stock price is adjusted to a lower price. The face value remains same in bonus shares, but your total investment will also remain same. Only thing is the quantity will rise. Then we need to see the debt to equity ratio. Matlab, how much debt burden is there on the company compared to the equity ratio. So over the time, Haresh sir has set a threshold, which on a later stage he'll share. A certain threshold uske niche hai, to then it's a good debt to equity ratio. The company is performing very well. Okay. Then we already went through EPS and PE. Intrinsic value, I think there's a next slide for intrinsic value. Okay. So 5 most important factors in fundamental analysis. Obviously, net profit it should always be rising. Profit margin should be rising. If the profit margin is declining, that means the company's EPS will also decline, and eventually it will not make good profits. I mean, not perform well. Then return on equity. This is a very important parameter. How much the company is able to return, I mean, return on the total equity. It's called as ROE. Then the P ratio, price to earning per share ratio, which we already saw. Then price to book ratio. This is one ratio which is extensively used for banking and financial institutes to evaluate the banking and financial institute. This particular price to book ratio is used. Then here we have designed the weightage. Now these are the factors that we learned. Now how much weightage we should assign to these parameters. So 25% weightage is given to valuation, as in the PE, price to earning ratio, and price to book value. Then 25% weightage is assigned to the growth parameters. So what are the growth parameters? Is the sale increasing? Is the profit increasing? So here we have taken 3 years sales CAGR and profit CAGR of 3 years. Is it rising or not? Okay. Then 25% weightage is given to the profitability and return parameters. So the ratios like return on equity, ROE, ROC, then in US it is called cash return on invested capital, ROIC. So these are the ratios which are given a 25% weightage while selecting a stock. Then to analyze the financial health and health of the company, how financially healthy is the company. For that we have assigned 15% weightage, and the ratios important in this particular section is Altman Z ratio, Altman Z score, which will indicate if the company is able to generate good amount of cash, that it can take care of all the expenses, all the debts and liabilities and everything or not. Basically financial health. So for that, Petrosky score is a very good parameter to check. Like Mr. Petrosky, he had over the time designed this system wherein he has assigned 9. I mean, he used to put 9 parameters of a company to check the financial health of the company. So and has given a check mark. Like if the company meets all 9 parameters, then the Petrosky score will be 9, and it's a very healthy company. If the Petrosky score is 3, I mean those 3 parameters only matches the criteria, then it will the score will be 3. So these are little advanced parameters which I think later on stage sir will explain. Then debt to equity. This is also, I mean, kitna debt hai equity ke uspe. So this is also a very important parameter. The higher the debt, the worse the company is. The lower the debt, and there are many debt-free companies. in the market right now. Then 10% weightage is given to the margins, like operating margin, average operating profit margins. So this is how these are the parameters, and these are the weightages that one should assign while selecting a stock. Yeah, this is now intrinsic value. This is a very important factor. Like intrinsic value is basically the true value in a nutshell. What is based on the fundamentals, a true value is derived. For that, a system called financial modeling is used. Okay, extensive Excel formulations and all are being used. So to derive an intrinsic value, we go through the fundamentals, historical fundamentals. Based on that, we come up with the assumptions, and based on assumptions, a forecast is being made. So all this happens during the phase when we use fundamental financial modeling. So basically, intrinsic value is a very important parameter. Anytime when we are buying the stock, we should check what is the intrinsic value. Say if the current market price is 200 and the intrinsic value is only 100 rupees. So we should avoid buying such a stock, because the current market price is already at a higher price. बहुत महंगा है stock. Whereas if the market price is 50 rupees and the intrinsic value is 200, so that is a stock one should buy. And the delta between both intrinsic value and the current market price is called margin of safety. This margin of safety was intensively used by Benjamin Graham, who is the father of the fundamentals. And later on, Peter Lynch and Mr. Warren Buffett also used it extensively in their investments. So higher the intrinsic value, better the stock is.
Mr. Dhananjay, quick question.
Yes, sir.
Yeah, the intrinsic value you're referring to, are you referring it to the FNO chain?
No.
Or this is
FNO
different?
intrinsic value is different.
Okay. And how do you calculate
In
this intrinsic
FNO
value?
I think Manish, we
FNO
can take
intrinsic
questions.
value.
We have already shot up 1 hour more, so I think we'll take all the questions afterwards.
Okay.
I request Dhananjay sir, can we go a little faster because we have short of time?
Yeah, we'll go a little faster. So buy always, in short, buy always below the intrinsic value. The intrinsic value should always be higher than the current market price. Then it's a good buy. Now Dow theory, this I think I'll take it directly. Yeah. So there was Mr. Dow who introduced the Dow theory to us, and I'll just take this in a nutshell. Okay. He says the market discounts everything. Whatever price you are seeing, it has discounted all the events, past event, and whatever future events are going to happen, it will reflect to those future events, and the price change will happen. Okay. So primarily there are 3 primary kinds of trends. The market experience primary trends which last a year or more, such as a bull or a bear market. Within these broader trends, they experience secondary trends. Okay, in the primary trends, there will be small secondary trends. As in the bull run, you will see reverse pullbacks or reversals, short reversals. So it is what Mr. Dow is talking about. And the market or rally within the bear market, these secondary trends last from 3 weeks to 3 months. These are very small trends. Secondary trends are small trends, not big trends. Finally, there are minor trends lasting less than 3 weeks, which are largely noise. So it talks about 3 phases. Okay. Then he talks about the two indices. One is the Dow Jones Industrial Average and transport Dow Transport is the indices he's talking about. And what he says is both the indices should move together. I mean, if there is a divergence, then that confirms that there's a change in trend. So say if Dow Industrial Average is moving upwards and Dow Transport Index is also moving upwards, but suddenly after a while, say 3 months, Dow is moving up, but transport is coming down. So that is not a good sign. That indicates that the reversal is very near. Then if the stock rises, it should rise with volume. Okay. The volume, whenever the volume is dried out, that means it's a sign of a reversal, early sign of reversal. Okay. So I'll just come down to, okay. Yeah, this is the Dow theory basically. The first phase is the accumulation phase. Okay. You'll see the volumes are very less. You see here the volume activity is very less. So this accumulation phase is the phase where the smart money enters a particular stock. Okay. Then a little pullback comes. And now it comes into phase 2, where you see the little rise in volume from phase 1. Slightly the volume rises because here the public participation comes in. Then there's a little pullback, and now phase 3 comes in, where everybody wants to buy. Okay. Then the distribution phase comes in, where the smart money which had entered in phase 1 will exit at this phase. Phase 1 of the distribution phase. So this is the early sign of a bear market. You see, these pullbacks were very small, but here it has come down with a, and you see the volume. There's a big sell-off, a big red volume is shown here. So a move with a confirmed volume, higher volume, is a confirmed move. And you see the distribution phase, here the smart money exits. Now the public realizes that the stock is falling. So in the phase 2, public participated in the phase 2 of the bull run. The second to exit here. And then in the phase 3, it's a complete panic phase. Everybody sells. In all the televisions and all, you will see all stocks are red. Market is very volatile at this phase. So accordingly, if you see the volume activity, so when the smart money has entered, that time the volume was very low. Then here in the middle, the volatility is very high and the volume is very high. And again, the volume falls. And slowly again after phase 3 of bear market, a new phase of accumulation starts. So it happens repeatedly. And this theory has been repeating since the day market has started, and it will keep repeating this. Something that has gone up has to come down. Okay. So that is what is Dow theory in a nutshell. Yeah, this is repetition of the same thing, bear and bull trap. If you see this mean, this is the price mean. Here, this is continuation of the blown off phase. Okay. The EF, this phase is continued and it keeps repeating. So this is the phase. It is called a stealth phase where the smart money enters. Okay. Now here the institutional investors, they enter at this phase. This is the awareness phase. Okay. So here the first sell off, the guys who are stuck here will sell at the first sell off phase. Like some people must have entered at 200. They saw 50. Now they here they see 75. So अरे चलो बेच देंगे यहाँ पर. So this is the phase where they sell off. But smart monies and institutional investors, they keep entering. And slowly you see the price is moving up. Now at this breakout, it enters a maniac phase where the stock is in attention of the media. All the newspapers will talk. Everybody will talk about the particular stock. Then it comes into the enthusiasm. Now here the public enters. And it enters a greed phase where everybody wants to buy. Okay. Now this is the place where the smart money wants to exit. The people who entered here are going to exit at this phase. And a denial comes. Then here people who thought अरे हमको लेना चाहिए था हम नहीं ले पाए, they will enter at this phase. अरे it is reverse, let's enter at this phase. And again the smart money gets a good chance, gets a good price to exit. Now here at this breakout, it's a fear phase, and now everybody wants to sell. And when everybody sells, it comes down to a very low price and it comes down below the mean. And this is called as a blow-off phase. So from here, again, the stealth money, smart money will enter. It will go up, come down. I mean, this is in continuation. That is how the market goes up and down. Now, how to identify at which phase is a stock at? Like if you see this graph, if you see this chart, this is S&P 500 index daily chart. when the smart money enters, you see the angle, it is about 10 to 15 degree angle. Then a little sell-off comes. Now you see the angle, it's 25 degree. Then a little sell-off comes. Then you see it's 42 degree. So whenever it is in maniac phase, the degree will rise. You see this degree? When it is slowly rising, that means it is not in a maniac phase. It is in a the smart money is entering. Here the public enters, and here everybody enters, and this is the phase where the smart money exits. Okay. So this was the last slide. Actually, I would like to share our journey. This particular group by Haresh sir has a statement, has a slogan, which says fish where nobody is fishing and fish where nobody is fishing. So it's basically cherry picking multi-bagger stocks at a very early stage. And I would like to share some of some of the stocks in our batch, which I am sure nobody must have heard the names of. Just a second, I'll share my screen. There was a stock called Kanji Kapuram. Has anybody heard about this name? Hello?
Yes, sir, we hear you.
Does anyone know a stock called Kanji Kapuram?
No, not heard about.
So this was our pillar stock for our batch. We had entered somewhere around 400, 425 in our batch. I think mostly everybody in our batch had entered.
Hmm.
Our batch, as in Harish sir's batch. I think ours was batch number 4. And the stock, this was in July something, July. And the stock has reached, had reached something around, it had made a high of 1365, 1300. We had entered at 425 something, and sir had already entered at 200, 225.
Are you presenting on a different this thing? We cannot see that slide if you are showing us.
No, it's not a slide. I have. Oh,
Yeah,
are
now
you able to see my chart?
now yes.
Oh, I'm so sorry. Extremely sorry. Are you able to see my chart?
Now we are seeing it.
Okay. So this is a stock called Kanchi Kapuram, which I don't think most of the participants have ever heard of this company. So this was one of our pillar stocks, which we had identified at an early stage. So we had entered somewhere around 425. It had reached a high of 1365. And this was in a very short span, less than a year. 425 to 1300. Okay, this was our pillar stock. And later on, we got to know sir had already entered at 200, 225. But still, you see the appreciation. in a very short span. Then we had a company called Balaji Amines. You see the growth story? This one also we had entered something around 800. And it had reached a high of 5,223. And you see the volume rise here, the volume rise which I was talking about. So this is the place where the smart money entered with high volumes. Okay. Then there was a company called SRH Hypo. These companies, I don't think you all must have heard, but we have entered and we have got 200, 230 for more than 100% profit.
Sir, this stocks you got it from some screener?
I'm saying we were part of the batch 4 of Harish sir, where he helped us. I mean, just like how you all are attending this lecture, we also had attended some in Shruti ma'am, I think 2019, I guess.
Sir, around July 2020 we started, and then yeah.
So we used to read books in our, I mean, by Peter Lynch, and there was a 100-year-old book, Psychology of Stock Market. So we used to group read those books in our batches, which has helped us a lot. So this is SRH Hypo. I mean, people don't even know the names of this stock, and we have appreciated our money investing in such stock. And all thanks to Harish sir and his efforts. You see the journey?
Yes, sir.
Then LTTS. You see the journey? The breakout came here at below 2000, and it was above 5,500. So these all stocks were identified in our batch, thanks to Harish sir for I mean, mentoring and teaching us this. This is a very good system, believe me. So over the time, Harish sir has developed his he has fine-tuned these parameters and fine-tuned the thresholds when what happens, what to buy, and how to sit tight after investing. See, basically, I was also F&O trader, and what I've observed that the statistics says that 95% of day traders, they lose money. I mean, I'm not saying this, but there's a company called Zerodha, a broker called Zerodha, who has got the highest number of clients. I mean, highest number of shares in the market. So they have data of the day traders that trade in their brokerage, using their brokerage services. And they came out with this statistic saying 95% of day traders, they lose money. And I mean, we used to do FNO, but after knowing the system and using it for 6 months to 1 year, and the conviction that this system gave, and so it is so peaceful. Like trading FNO, you just have to keep an eye on it. But this system, you just buy and forget. Then, I mean, once in 3 months when the results are out, that time you have to reanalyze, reassess what to do. Stay invested or exit this stock. So basically, this you are at the right place, and thanks to sir, he has not charged a single penny from us. I mean, this is a system that really works based on fundamentals.
Okay, can we have the questions now? There are some queries in the chat.
Sir, we have two queries. Is it good if company gives too many bonuses? Hello.
Yeah, ma'am.
Yeah, sir. So we have a question. If it's good if company gives too many bonuses.
I don't think it's really good, because then the number of shares keeps on increasing.
Hmm.
Okay, next question.
What is
Yeah,
Yeah.
sir.
what is preferred share and outstanding common share?
See, preferred shares are a special kind of shares wherein the shareholders don't get the right to vote. But in case of liquidating the company, the preferred shareholders are they get the first preference towards the benefit. They are also the shareholder. I mean, they are also part of the company. They are also stakeholders, but they don't have the voting rights.
And outstanding common share?
Outstanding common share is free float shares. Whatever shares are available in the public for buying and selling.
Okay. And there is one question. Can we avoid bull trap, institutional effect, or volatility by stock SIP?
Yeah, stock SIP is very good. Stock SIP has proven better.
Right. I don't know
If
what
you are
the
in a profession where you don't want to check all that, so SIP is very good.
can face value go below 1?
I have not come across till date.
Yeah, I don't think so. It can be.
So I think if Haresh sir is there in the meeting, he could put more light.
Paresh sir is not there probably.
Yes, sir. Yes, sir. I have also not heard less than 1 rupee.
I have not come across any share, any
Yeah.
script below 1.
There is a request. Can you show those angles in current chart explaining? I disappeared. Just a sec.
Explaining stages.
Yeah, explaining stages. Which
Acha.
chart actually?
The S&P 500 chart that we
LTTS
saw.
probably she's asking now.
Yeah, the charts sir, I think we saw in the end, the degree chart. In the current chart, as in the stock chart that was already projected in that chart.
Acha.
That was LTTS.
Yeah, so I think any chart. Okay, any chart. Okay, that's fine. You can show sir in this chart only.
I'll just
Dhananjay, there is a indicator for angle on the left side. To measure the angle, there is a tool.
sir, which tool basically? Projection tool, sir?
No, not that. Not that one. Go down, still go down. See the ruler is there, no? You see the ruler.
No, sir, this one does not have it.
This one does not have it.
Maybe my version is different, I think. That's the reason it's not there.
Maybe sir, we can draw and we can share later in the group.
Yeah, we can share later because it's already 1.5 hours.
Yeah, it's already 11 years. That's
But sir, here if you see the angle is very much visible.
Right.
The first phase is a lower angle. Then a retracement comes. Then if you see this phase, is slightly higher, say about 25 degrees. Then a little retracement, and
Yeah.
in this phase, you see the angle is very, steeper kind of. More than 35-40 degree angle it is. So it's very much visible, even if the indicator is not there.
Yeah. So I think there are no more questions. If there are any questions, we can actually mail, and probably Shruti ma'am, you can. In fact, I can say thanks to Harish sir, Shruti ma'am, Dhananjay sir. It was very good presentation, Dhananjay sir.
Thank you, sir.
Yeah, it's very nice. In fact, a lot to learn from all this. And maybe next week we'll again meet with a new topic. Thank you very much, and thanks all the participants for being there today. Thank you very much, and good night to everyone.
Thank you, sir. Thank you very much. Thank you very much.
Thanks, Harish sir.
Okay, sir.
Thanks, Shruti.
Bye bye.
Thank you all.